What's going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live if you're over on YouTube and if you're over on X. And as always, chat is open on both of those. Any questions you have, any comments you have, if you disagree with me, let me know. And as always, we'll be looking at some stocks later on. So drop any stock tickers that you want us to take a look at. Other than that, it's been a chop fest this week, but we're really looking to see what will come of all of this sideways action. So we're going to look at everything that went on this week. So without further ado, it's time for the rapid review. All right, so as always, this is for informational purpose only. You know the deal, educational, not investment or financial or trading advice. All right, so we're looking at the current state of the market. We are in an uptrend. We are in a power trend. In terms of distribution days, we're sitting at 3 distribution days on the S&P, 6 distribution days on the NASDAQ. So looking at our distribution day tracker, the first thing I do want to say is Investors Business Daily does show different distribution days on the S&P than I do. One of the things that I've realized is that the volume sources coming from the S&P vary greatly across many platforms. IBD does not technically show what their source is and doesn't really actually show the volume results, or it's very difficult. So I'm still doing some deep diving until I figure out a true answer. I'm just going to keep doing things the way that I'm doing. I check multiple sources. I'm looking at Thinkorswim. I'm looking at TradingView. I'm looking at a couple other websites and just comparing volume across all. So I'm sticking with what I have right now. And to be completely honest, it doesn't really change much of my outlook looking into the market, but just wanted to put that disclaimer out there for you guys. All right. So looking at distribution days, the S&P did lose the 9-10 September 10th stalling day on Wednesday. Thursday, though, we did gain a distribution day down on volume, which is this 10-16 day that you see over here. On the NASDAQ, the only change that we had was we gained a distribution day on Tuesday, which is that 10-14 day. So we see that over there. Other than that, looking into next week, we are going to lose the 9-17 distribution day due to time. We'll get 25 trading days since that day, dropping that day off, which is then going to result in us holding a count of 5 if we don't see any changes there. Other than that, nothing else to say in regards to distribution. Looking at the indexes, the S&P was up 1.7%, NASDAQ up 2.14%, Dow up 1.56%. Very, very misleading though. So big up weeks on the NASDAQ. Strength, we're seeing, green, we're seeing very, very misleading as to what's going on with the market right now. We will talk about that when we get over to the indexes, but just wanted to put that out there for anybody watching. For the year, the S&P is up 13.3%, NASDAQ up 17.45%, and the Dow up 8.57%. Hey, what's going on, Chad? Good morning. Absolutely, we'll take a look at that for you when we get over to these stocks. We'll take a look at Google. I actually have a pretty big list. We'll go through them pretty quick, but yeah, I'll definitely take a look at that for you. All right, current state of the moving averages. As you can see, we're red below all the 10-day simple moving averages on every single one of the indexes that we're looking at, but we did close below the 21 EMA, which is a positive signal right there. So last week, we were below both the 10 and 21 EMA. Now we're above the 21 EMA. Positive action to see that there. Other than that, let's jump over to Thinkorswim, and let's take a look at what is going on with the indexes. As we always do, we'll start off with the NASDAQ. We will start off on the daily. I'm going to zoom in. You guys can see this has just been a ripping market, but in this last week, things have got a little choppy. So we'll zoom in a little bit over here. And really, this we talked about last week being a real pivotal week in terms of seeing how we reacted to that Friday tariff kind of news and huge drop off. So you can see that here Friday. That's that big drop off, gaining some distribution day, ripping through that 10 and the 21 simple moving average, pulling into that prior low on the 925 low. But the question was, were we going to see a reaction like we have seen prior on these pullbacks, on these dips below these moving average, where the market just tended to react and rip right back to all-time highs? Or which a lot of us were seeing because of how volatile that day was. We're going to see some sideways action, or were we just going to completely roll over and break down below this prior low of the 50-day? What we got was the chop. And as a trend following trader, that is the worst situation. That is the time that we do not want to trade because it becomes very difficult. But it didn't look like that at first. On Monday, we had this big gap up. We got back above that 21 EMA. And then we closed for the high for the day. So things looked very, very positive on Monday. But then you could see the rest of the week, we got exactly that choppy sideways action. We spent a lot of time bouncing intraday up and down below that 21 EMA. It was just one of those where, depending on when you looked at it, we were either above or below that moving average. But what was interesting was we did see that from Wednesday on, we found a way every single day to close above the 21 EMA. Very, very positive to see that. Seeing us, at least as much as we're fighting up and down, at the end of the day, the bulls are winning out and keeping us above it. We did a little chop around the 10-day simple moving average up here, as you can see that. But overall, it's just been very, very volatile. You can see that just these intraday bars and everything just chopping around these areas sideways, not really getting much progress. Very, very volatile, very, very choppy. Not the type of market that we want to be putting positions on, because one day you're up, next day you're down. You're getting stopped out of things constantly, getting that death by 1,000 cuts. This type of action is not what we want to see. So other than that, we are seeing these moving averages, the 10 to 21, starting to converge, which is definitely positive to see that, because it could signify us maybe tightening up, which would be best case scenario, that we could tighten up and then bounce higher. But as of right now, not much else we could say. It's just kind of a sit and wait, see how the market reacts. Like I said, ideally we get that tightness and then we bounce off of there with some high volume, which would be a good signal that we could probably start testing the market a little bit more. Or to be completely honest, I would have no problem if we just rolled over and just broke down to the downside to just give us some sort of trend, something that we could really, really know which way this market is heading. Last thing that I wanted to say too is you can see the volume. We had the distribution day here. You can see volume higher here, lower here, a little higher on Wednesday. So like the volume was definitely seemed like it was more towards the downside despite where we closed. Again, really, we're just going to have to sit back and wait and see what this market does. We'll jump over to the weekly just to take a visual look at it. And then as you can see, you got the big upper wick, big lower wick. You can see again that we're above that low of this week, 922. But yeah, just really signifying that more chop and really no answers as to what is going on over there. So looking at key levels as we go back over to the daily, I kind of already said it, the 21 is really where I want to see us hold above. I want to see us tighten up around here, and that would be ideal if we could break higher. You're also looking at the all-time high and the 10-day simple moving average, as we always are right here. On the downside, the 21, is it support or is it resistance is really the question that we're asking. And then we're looking at the September 25th low here, which is also coinciding with the October 10th low right here. If we break below that, that's going to be definitely a negative sign, and then likely to be very close to that 50-day simple moving average, which is if we break below both those levels, I think most of us are going to be completely cash at that point. All right, let's jump over to the S&P just to take a visual look at it. But to be completely honest, we are seeing nothing different here. Pretty much identical action. Literally, the only difference I'm seeing right here is that Thursday we were down below 21. Other than that, not much different there. Cool. Looks like nobody's got any questions on that. Let's jump over and let's take a look at Deepvue. And we'll take a look at the theme tracker. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for all of my stock screening, chart analysis, fundamental analysis, industry groups, everything. If you are interested, there's currently a waitlist. It should be opening up very, very soon. YouTube, I have a link in the description. X, I have a link in my bio. You guys can get on that waitlist. There's also a discount code for 12% off. It's a one-time code. I highly suggest saving it for an annual membership, but that's up to you. And yeah, this tool is amazing. When we go through some of the stock stuff, you'll see what that kind of visual looks like. All right, so the update you'll see for the regular viewers that's different is they've now added a 3-month theme tracker, which I absolutely love because I think the 3-month and the 1-month are the two time frames that I really tend to focus on most. This being like kind of maybe that early turnaround, this being more of what is consistently leading as of right now. So going from left to right, you can see on Friday, no surprise there. Bitcoin miners just continue to lead straight across the board. China stocks did bounce back a little bit. There was some stuff that went on. I believe Trump might have said something along the lines of the talks are going well, but we know how that is. One day it's one thing, one day it's the other. Really, though, looking at the week, that's the big thing, right? This is what I think is interesting, right? We had a strong up week. We saw green on all of those indexes. But then when you look at these groups, you can just see that the action from where we opened for the week is just not good. Really, Bitcoin miners were the only things that really, really outperformed, and biotech. Solar did okay. Utes, he's not in here, I don't think. But Stretch, if you're in here, Utes. And if you guys don't know that movie, you got to figure that out. But yeah, I think the big thing really to talk about that's still showing strength really is just the Bitcoin miners and the biotech. Biotech really showing strength. Other than that, the big thing here is the nuclear and quantum got hit pretty bad. You could see going down here, quantum got hit. That was just going parabolic at a point. And the nuclear, where'd nuclear go? And we'll look at some of these stocks. So just in general, nuclear got hit, but you guys are getting a good visual as to what's going on right now. Really, the story right now is the big biotech's doing well, Bitcoin miners doing well, everything else kind of getting a little choppy. And this is why I like seeing these things on different time frames because, right, you look at 1 month and you might be looking at some of these semiconductors and quantum and a lot of these things that are actually starting to roll over and top. Where you start looking around this, you can kind of see a little more visual of how that's happening. And then it will also bring some light to stuff as we consistently see them on this 1 week time frame. It starts to then carry over into these other time frames. All right, so real quick, before we start looking at some of these stocks, let's just talk about exposure levels, where I'm at. Look, if you have trades that are performing well, you just need to manage those trades based on what the market is doing. As we all know, if the overall market rolls over about 80, 85, however, whatever number you want to apply to it, majority of stocks are going to tend to trend with the overall market. So that's something to take into account, that if we do break to the downside, some of the names that you might have might roll over as well. The same instances, though, if we break to the upside, these names might pause and then rip higher. So just anything that you have still that hasn't hit any of your stops, just have a plan as always for both directions. Know how you're going to handle it. Give them the chop. Give them what's going on in the market. The big thing for me though is this is just not a time for new buys. This is not a time to be constantly putting on new positions unless it is like a top tier A+++ setup. There were a lot of names I was very, very tempted to purchase this week that were hitting buy points. Some names that hit, I didn't buy, and then I watched them just rip out of a pivot point. And then the next day, they just rip back in the other direction. So this is one of those times where, as hard as it is, just sit on your hands, be a little more patient, understand that there's going to be times when there's easy money. There's going to be times when there's more hard money in the market. And we've had a very, very easy dollar market this year. And hopefully you're able to capitalize on that. And now for me personally, I'm sitting in all cash. A lot of my stops got hit. I had LIF, I had NVIDIA, I had Run, which I just took profits on because it was a small position. And now I'm just sitting back, conserving that mental capital. Money was made. I'm not going to play around in this hard market. And then when things get better, I will push on the gas again. But that's where I'm at personally. Why play around when things are much more difficult? Because that's a big thing, that mental capital. If you exhaust your mental capital in this chop fest and come out of it even positive, then when things get very, very easy, your trading is not going to be as good as if you took a break, you sat back, you waited for the signals, and then you jumped in, and then you were clear-headed, able to capitalize. So psychology is a huge, big part of trading. You have to take that into account if you're going to be extremely successful and beat the market. That is just where I'm at right now and why I'm just sitting back with a nice cup of coffee and watching the markets open and watching how things pan out and keeping an eye out for basically what's showing strength and what could possibly be the next leaders if we do go higher. All right, so let's jump and take a look. We'll go back over to Deepvue. And what I really wanted to do now was look at some of the prior leaders. We'll first start off, Chad. I know you wanted us to look at Google, so let's bring that up. And we'll take a look at this. All right, so this is very interesting, right? We're looking at this on a daily. We'll pop over on the weekly. You can see that too. We're looking at this on the daily, and this has, basically shown some tightness, some strength. You got this nice double bottom. You could argue that it did break out already from this small double bottom right through here. And you could probably say that it was Wednesday. We looked like we tried to get higher, and then we pulled back, and then we reacted good. So this kind of broke out from that double bottom, that tight action over here, which is definitely a good sign. Showing some resistance up here. If I can make this a little brighter. Showing some resistance, though, up here at those all-time highs, getting rejected there. So if you bought in here and you bought at the double bottom and you're sitting in green, and I don't see anything wrong with that. Like I said, this market, I think you should definitely be a little more selective and a little more patient. But this isn't in high ATR stock. You're only looking at 2.39 here. It's holding above that 10-day moving average. Yeah, I don't see anything wrong with this. Being that this is one of those big players, this could be a signal that if this could break out and go higher, then maybe the market can also see some relief, and then we can see that if the market goes up, a lot of these names will kind of tend to follow with it. So really looking forward here is just seeing, like, do we start to chop around at those all-time highs? And that kind of like segues perfect into looking at Palantir, because we had some times like this with Palantir, right? You had some times where you had this like cup with handle, small cup with handle came in here. We wedged up and then broke out, and then we just kind of chopped around sideways near those all-time highs. So curious to see what happens with Google. Again, personally, I'm kind of just sitting this market out, just being a little more patient, waiting until things tighten up and we get an easier market environment like we had throughout the rest of the year, beginning of the year. So while we have Palantir up, though, because now I just kind of want to look at some of those leaders. And again, if you're watching, just throw a couple stock tickers if you want to have us look at anything in particular. But just the fact that this is kind of like holding up and not breaking and making new lows is definitely a good signal, I think, to just see one of the prior leaders not completely roll over, but also bad to just see the volatility in the chop that we're getting in here, very similar to what we had in the market. But just like how this is at least holding up and not rolling over, being a prior leader, because that's not the case with all of them. Let's look at Robinhood, another leader from this year. And this is what we're talking about, right? Robinhood has just taken off. I was lucky to get a position on this earlier. I did end up getting shaked out somewhere back here, I believe. And then it had another base, just went on higher. This has definitely been a market leader. But as you can see, we've kind of rolled over. We're holding above that 50. So for those long-term position traders, likely you guys are still in this one or have some sort of a position if you haven't liquidated it because of the market. But if you had to stop at the break below the 50, you're probably still in this one. But don't like how things are starting to roll over here. Not positive there. Another one of these leaders, Credo, right? Same thing. Very similar action to what we had with Hood. This has just gone on a complete tear. You could see the stupidity that I had over here where I got shook out. Emotionally closing out my trade on the intraday break of the 21. Still kicking myself for that one, but is what it is because I ended up getting. I would have got shaked out over here anyway, but could have had a little bit more profit on this one. Completely goes just parabolic, just takes off. Then, as we'd expect, starts to roll over. Now it looks like we're just chopping around at the 50. So seeing where this goes will be pretty interesting too. Then you have A-Lab. A-Lab, from what I remember, not as good. Definitely not as good yet. So A-Lab, Credo and A-Lab, two stocks that I was kind of watching simultaneously, playing very much into the same AI kind of field. This broke out. This kind of went on a big run. And then now this is like made a severe break below that 50. It's broken now 2 prior lows. This looks horrible right now. Absolutely horrible. This looks like it's getting ready to roll over even more. Not a good sign seeing some of these prior leaders starting to look like that. Another one we have is APP. app loving. This finding support at the 50. So we're seeing some of these names. I don't know why this is here. We're seeing some of these names finding support at the 50, which is good for the long-term uptrend. But we're seeing some of these names completely roll over through the 50 too. So we'll look at GEV. GE Vernova, another one of these leaders from this market that has gone on a big run, has just been chopping in this this kind of base pattern right here, but has now broken below that 50. It has done that before and has found a way to rally. It has not created a new low, which is a positive, but still being below that 50, not the greatest signal. Watching this leader as well to just see as another idea of what might be happening to this market. And if we do turn around, if these names look great and give us an opportunity to get in, this is that second chance, which a lot of us didn't have if you missed a name like this, because it was somewhat of a lockout rally. AMD, one of the better looking names in this chop fest. We saw this massive gap up 23.71% from the close, but it closed near its lows. It was up like, it was like 40% or something ridiculous. It is hovering above this big sideways base early here from the 2024, early 2024. Overall, this is positive action. You can see it's definitely choppy, but we're really just riding that 5-day simple moving average or 5-day exponential moving average. It's right underneath those all-time highs. We're sitting at 3.37% below those all-time highs. So this looking like one of the better names. Ideally, as a trade-wise, if we can kind of tighten even tighter up, let these moving averages catch up, maybe give us a chance to get into something like that, that would be positive, because I don't want to buy something completely extended right here, because especially in this market, we could just completely roll over. NVIDIA, like I had said, this was one of the names that I had prior to just liquidating it. You can see that this is one of those names that had pulled back, broke below 21, found support at the 50, haven't completely rolled over, but we'll see how that acts going into next week. Reddit, one of the more poor performers. You can see, sorry, I got so much crap on here. This is what happens when you don't delete stuff from all the way back here. But yeah, you can see this is broke below that 50. We're below all your 10, your 21, your 50, your 5 moving average. We're only above the 200, just completely in a downtrend. This name looked super powerful. People made a lot of money on this move, but now we've kind of rolled over, so not looking that good. Now let's get into those quantum names. These quantum names, just absolutely insane move that these things have gone on. Looking at this was like a perfect VCP pattern. This really set up an opportunity for a lot of people to get in on this. You could have bought down over here on the 9th. You could have bought over here, breaking out of the VCP pattern. There was a lot of chances to get in this and take on this big run, but it just completely ripped higher, and now has broke below the 10. It has not completely broken down. This could just be a healthy pullback to the 21, but just seeing how towards the end of the week, this is a volatile stock. First off, you got a 14.33% ATR. So that's something you have to understand, because we were down 14.86% here. We're down only 3.31% here, but we're really still holding above that 21 EMA. So it's not too concerning, as rough as that probably felt for anybody holding this. So curious to see how these quantum names react. They have been leading the market as of the last month. Let's see how it does going into next week. Along with those names, you have OnQ or IonQ, another quantum name. This not looking as good. This has broken below that 21. It's pulling in towards the 50. It is close to creating a new low right here, but finding support there. So this really being the line in the sand, I think, for this name. If we break below here, that's not a good sign. QVTS. Another quantum name, holding above that 10-day, went on another rip. Similar, you saw this long basing pattern. They all kind of broke out together around the 9th and the 10th, and that like kind of second week of September. Hasn't broken down, but just seeing the pullback over here. We'll see, is it just a pullback, or do we roll over with the rest of the market? And the last name I'm going to look at, this one is a nuclear name. Nuclear looking really, really healthy. Oklo being one of the leaders within that space, making a really, really nice move from down here, pulling back, holding above that 21, continuing to ride, holding above the 10 right now. You can see the volume really on the upside looking great. But yeah, again, a lot of these names, these are the names that are holding up. You're seeing some of those past leaders breaking down. It's kind of been a mixed bag. But whenever I start to see some of those names like ALAB, some of those other names that were really market leaders starting to look like they are on the cusp of breaking down, that just is a very big concern of mine. If the market does roll over, we'll see a lot of these growth names get hit and get hit pretty bad as they normally do. All right, let's finish this off. Final thoughts. Look, I've said it a couple times here. There's a time in the market we're going to easy dollar market. There's a time we're going to have a hard penny market. And we're in that kind of hard penny market right now. Unless you are in some of these nuclear names or some of these quantum names that are really, really trending well, it's been pretty much a chop fest. There's been plenty of names that I've seen that have broken out and then completely rolled over, just back and forth through pivot points. And that's not the kind of environment we want. We don't want to constantly be getting stopped out. We don't want to hurt that win-loss ratio to the point where it's negative and really impacting our equity, because that death by 1,000 cuts, as many people have heard, it's rough. In my earlier years of trading, I had a point where a market like this gave me death by 1,000 cuts, and I didn't understand what I was doing, and I lost 40% from my peak equity. It was brutal, and the mental recovery from that is not fun. But that's why these markets, I think, are just a time to really be patient. If you have stocks that are performing well, just manage those trades, but be very, very, very selective, if at all. Did I lose you guys? Okay, yeah, sorry. I lost you guys for a second. But use this time to try to make sure that we are looking for those relative strength names and possibly that second opportunity to get into some of these big leaders that have locked us out. Because if this market does continue to turn upwards, this could be that opportunity to get in some of those names like a GEV, like a Credo that haven't really given many buy points. Other than that, just look, this is another great time. You've got a lot of extra time on your hands as a trader. Study, review some books, review your notes, review your past trades, review true market leaders, and use this time to really just mentally prepare for a new market. Other than that, I think I lost you guys over on X. YouTube, I think you guys still got me. So I appreciate everybody joining. Thank you. And other than that, there is YouTube. You guys know that link. You guys are watching. There's the X account. Discord. Huge shout out to Discord. You have the link in the description of YouTube. And there's my email if you wanted to shoot me an email for any reason. Like I said, Deepvue, you got a link in the bio. Sign up for that wait list. They also have a big update coming out that's going to be game changer, absolutely game changer. So definitely want to check the application out. Definitely want to get your name on that wait list. And like I said, there's no credit card or anything required to be on that wait list. That's all I got for this week. Stay disciplined and